6 mornings running, I handed you the same red mark Warband. Not this one. It is Monday, the 17th of August, 2026. At midnight Eastern, our board turned, and it did not turn alone. As of just after 5 o'clock this morning, Eastern, Bitcoin trades at 63,300, up about 0.5% on the day, and its optimized trend flipped bullish. Midnight Eastern. 5.5 hours ago, Ethereum's trend flipped bullish in the same minute, and it trades at 1,890, two of the three majors, one signal, one timestamp. Since noon on the 10th of August, I have opened 6 briefings telling you our anchor carried red, and that I would not soften it for you. It is green this morning, and you get that the same way, the same hour it happened. The regime reads risk on and pointed up. The broad market green, the Nasdaq green, gold green, and the long bond standing alone in the red column. That is our read of the InvestAnswers Decision Support System. Now read the sequence, because the order is the entire lesson. Friday evening, Ethereum printed mean reversion oversold. Saturday at midnight, Bitcoin printed the same. Then, roughly 48 hours later, both trends turned up. Stretched first, turned second. That is precisely what this model is built to do. It measures how far a thing has traveled from rest before it ever ventures an opinion on direction. 2 honest marks against the celebration. Solana did not come with them. It printed mean reversion oversold again at midnight. A third session running at $75 with no trend flip beside it. And Coinbase, the largest listed proxy for this asset, still carries its trend red from Friday's bell. Hold that against what I showed you Thursday. 3 sessions ago, the wrappers were green and the coin was red, and I told you capital was busy buying everything that rhymed with Bitcoin while selling Bitcoin itself. This morning, that is exactly inverted. The coin turned, the proxy did not. Now, as I opened with yesterday, SpaceX and Anisphere, I will not walk you through that filing a second time. The deal closed on the 14th. The 8K is public. Cursor confirmed it the same day. What I did not put in front of you is what SpaceX actually handed over. Not $60 billion. It issued roughly 389 million new Class A shares. Sit with that number. A board authorized 389 million units of a thing that did not exist the week before, and traded them for a real operating business with real revenue. No cash left the building. The consideration was manufactured at the moment of the transaction by the party paying it. That is not a criticism of the deal. On the merits, it may be brilliant. I'm pointing at the instrument, not the trade, because this is the mechanism at corporate scale that we object to at sovereign scale. When you own a share, you own 1 over N, and you do not control N. N is set in a room you are not invited to, and it can grow by 389 million on a Friday afternoon. Every equity holder on this earth is a minority partner in a supply schedule somebody else writes. 319 million more insider shares come free to trade on Thursday. Now set that against the other half of the very same company's week, because the contrast is the whole point. Saturday night, SpaceX launched a global star replenishment mission out of Cape Canaveral at 12 minutes past 9 Eastern, and a classified Space Force mission out of Vandenberg 38.5 minutes later. Opposite coasts. The tightest gap between 2 launches in the company's history. That was the 96th Falcon 9 flight of this year. Nobody printed that. There is no share issuance on Earth that produces 2 ranges, 2 pads, 2 crews, and 10 years of accumulated cadence. 1/2 of that week was bought with paper the company created out of its own authority. The other half was earned with hardware it actually flew. There is no meeting anywhere that can authorize a 21 million and first coin. Hard money trends green. Now to why this morning's turn carries more weight than 0.5% deserves. InvestAnswers published a note Friday describing this stretch as the quietest Bitcoin has been since 2017. Roughly 7 months pinned near 64,000, one of the longest low volatility runs on record. I flagged that framing for you over the weekend. Here is the piece worth adding this morning. Kathy Woods read, is that the 4-year cycle itself is breaking. Her argument runs that with better than $100 billion now sitting in the American spot funds, institutional ownership damps the amplitude that used to produce 75 and 90% drawdowns. She has kept her 5-year targets on the record straight through this chop, 750,000 at the low end and $1.25 million at the high. That is her call. I hand it to you as hers. But take her mechanism seriously and then be honest about both edges of it, because almost nobody says the second part out loud. If institutions genuinely damp this cycle, they do not only catch you on the way down, they cap you on the way up. The same rebalancing mandate that buys an 80% drawdown is the mandate that sells the parabola. You do not get to keep the melt up and outsource the crash. A market that stops falling 90% is a market that stops rising 1,000%, and everyone selling you the first half of that bargain goes very quiet about the second. So decide what you actually came here for. If it was the volatility, the 4-year rhythm, the vertical autumn that made men rich in 90 days, that thing is being traded away for respectability, and the trade may already be finished. If it was the supply schedule, then nothing whatsoever has happened. Institutions can smooth the price. Not one of them can touch the issuance. Volatility was never the thesis. It was the toll we paid to hold it. Scarcity was the thesis, and scarcity does not care who owns the float, which is exactly why a trend that turns up out of a 7-month coil is worth more of your attention than a 3% day inside a trend that was already running. One last mark, and it is the engine underneath all of the above. The dollar fell for a 3rd straight session into Friday, and on that same day, the emerging market currency index closed at a record high. A record, measured against the reserve currency of the world, by the currencies of countries this market has spent 40 years calling fragile. What moved it was a repricing. Implied odds of a September rate hike have collapsed to roughly 30%. 1 week ago, that number was 44. Read that carefully, because nobody started cutting. Nothing was eased. The committee merely became less likely to tighten, and the currency sagged on the absence of further defense alone. That is a currency which requires continuous defense simply to hold its ground, and gives way the moment that defense is questioned. The July minutes land Wednesday, and they will show how close the 3 dissenters who wanted an immediate hike came to winning a 9-3 vote. So set those two side by side, a currency that weakens on a maybe, and an asset whose trend turned up at midnight in precisely that weather. Those are not two facts sharing a page. One is the cause of the other. Take this into the bell, Warband. 6 mornings I gave you red without dressing it up, and this morning I give you green the same way. That is the only thing that makes any signal worth holding, that it costs the man delivering it nothing to be wrong out loud, and carry the week's real shape with you. One company created $60 billion of consideration on a Friday afternoon and bought a business with it, then went out on Saturday night and flew steel that nobody else on this earth can fly. Everything on this board that can be authorized eventually will be. Ours cannot. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. The board turned in the night. See that you turned with it. Skål.